The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 17th Marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential is something that we must master each and every day. So let's go begin with an empowering belief. I love this one. It's called Live with an Attitude of Gratitude. You know, folks, gratitude touches the ultimate foundation of our human existence, for there is hardly another quality within each of us that is so suited to reveal the state of our capacity. You know, no one can be grateful to himself, for gratitude goes from one person to another. And folks, that's why I'm grateful for your presence here today. Gratitude goes from one person to another. It's just that simple. Make sure you have a gratitude list. Make sure you're taking use of that smartphone device that you've got. You've got a memo pad in there. You should absolutely have a gratitude list. You're going to need it because the universe always likes to test you. It's going to throw you a loop every now and then. And when it does, or when you feel some negativity rush in, just pull up that little app that Stevie told you to put down there. Go take a look at all the things that you're grateful for. And that negativity, it'll be flushed right out of your system. Let's go check out the flushing of negativity out of the system here today. Right now, we've got the Dow is up 162 points, trading out at 15,231. S&P up 16 points, trading at 1643. NASDAQ up 38 points at 3461. Russell 2000 up 9.7 points, trading at 991. NASDAQ 100 up 37 points. That's up 1 2/10%. That is the leader in the Clubhouse, trading out at 2980. Right behind them, and this is important to know because of the weak link out here, is number 2, Nose for Nose, up 1 1/10%. That's the New York Stock Exchange, up 103 points. We've got net advancing issues of positive 1936 out here, so nice market breadth in the participation of this rally. This rally here just really setting up the next buy pattern. So let's start off, or the sell pattern, I should say. Let's start off by taking a look at the New York Stock Exchange. You know, the New York Stock Exchange formed a nice, almost a point, in between a 0.618 and 0.786 Gartley buy pattern. It did that as the market was moving down, making its move into that June 6th low out here. If we go from the high, which is going to be your May 22nd high, 96.95.46, down to the low put in on June 6th. Let's go ahead and take a look at the retracement of that level. As we go from high to low, what we can see is right now you got the New York Stock Exchange above the 0.382 retracement level. It's coming into the swing point from June the 10th out here. I suspect it's going to be able to take that on, close above it, which is 93.83, and make its move up to the 0.618 retracement level. That'll take in about 94.82. That also will be the test of the May 22nd swing point. Looks to me like that's what the New York Stock Exchange wants to do before it goes ahead and gives us our next signal. Now, if we take a look at Friday's action, if you take a look at the top of June 6th, the high out there was 92.60.50, and on Friday actually closed at 92.63.69. So it rejected that area. It did it on lighter volume, came back and tested it on Friday. That was another test of that high volume, and that New York Stock Exchange, as well as all the indexes, it's a high volume bar from June the 6th out here. That's what we had take place on Friday. That was a rejection of a swing point, and that's what is really setting up the move here. You know, Monday volume will likely be low today as well, so I'd say going into Tuesday, Wednesday as a estimated time frame here, you're looking at a move up to about 94.82 as it gets into that 0.618 retracement level. Let's take a look at the NDX 100. The NDX 100 had that hammer candle out here that formed on June the 6th. That was after making And actually, that was after coming back and testing the gap up from May 2nd. The high there was 29.16. You came back and tested it with that hammer on June the 6th. The hammer was tested here on June 13th on Thursday. Friday was a pull back into that hammer candle, but it had already passed its test here on the trading session of June 13th. Now, as we take a look at the retracement level, we're going to go from our May 22nd high down to the low of that hammer candle. What we can see is prices above the 0.382 level. It's on its way to the 0.618 area. 3,000, maybe even 3,023. We're going to get some information today, looks like we should at least, and that is where the NDX here is going to test that May 22nd low. That's 29.8484. You're trading at 29.8180. A close inside that candle. To me, that really sets up, not that it couldn't go test the highs, which it could, but at least it sets up more likely that move into 3,023, the 0.786 retracement of the move out here. You get a rejection of that area, well, then what we just simply have is nothing more than the yo-yo effect that we have had here for the last couple of trading sessions, trading weeks out here. So it's been a trader's paradise. We'll see where the NDX closes. What you're going to be paying attention to is that price level, 2984.84 out there. Let's go take a look at the S&P 500. Let's go see what it is doing, because they're all really setting up the same chart patterns out here. Inside the S&P 500, that had pulled back on Friday with light volume. It had formed that nice 0.618 Gartley buy pattern. A normal move inside any Gartley pattern is going to be the 0.618 retracement of your A to D leg. In this case here, inside the S&P 500, that says 1653.20. Right there at the low of May 22nd, it's 1648.86. So the question is, are we going to see it close inside there? If you do get a close inside there, that sets up your 1668-ish level inside the S&P 500 for its next. Now, for its next sell pattern to approach. And what would that sell pattern be? Let's actually go draw it in here on the chart. If we go from the, it's going to set up a Gartley sell pattern. That Gartley sell pattern, it would look just like about that. And well, I should change the color there, make it a little bit easier for you to follow along. There we go, make it a nice dark yellow pattern out here. So that is the range here, 1650 to 1666, and all you have to do is pay attention, wait for the bears to show up in the marketplace. They will reveal themselves, but looks to me like that is what the S&P 500 wants to do. Let's go check out the, what have we missed here? The Dow. Let's go take a look at the top line number, the headline number out here. The Dow right now trading out at 15,236. Let's go take a look and see what the Dow did. Could not make it back on Friday to the top. Well, I don't think it did. Let's see. The top of June 6, 15,040.62. It got down to 15,044. So it didn't quite make it back on Friday's session, but it was light volume on the way back. The Dow also forming a 0.618 Gartley buy pattern. It, too, will form a Gartley sell pattern. Now, if we take a look at the retracement level, normal retracement of any Gartley pattern is that sweet 618 level. Right now, looks like it's going to come in there today. We should see that level tested, the 618, which the number is 15,275 and a little bit of change. Now, the low of May 22nd is 15,265. So that's the key. You know, will it close inside May 22nd's low? And if it does, that sets up the move inside the Dow to 15,392, where it will set up its Gartley sell pattern out here. We'll take a look at that. We'll draw that in on the chart here. And that looks like this. We'll go ahead and color it as well. Now, if you take a look at Fibonacci numbers inside the Dow, does it get any more beautiful than that? Let me pull that back here. And what I mean, we'll blow that up on the screen. Take a look at this. Now, this one is for the ages. Actually, it's for the textbooks. And the textbooks, what I mean is if we take a look at this. How beautiful can you get? It's got it's got almost all of our numbers. If you come off the May 22nd high all the way down to the low that was put in on June 6th, and then take a look at the retracement that came back as the market pulled back on June 13th. That made a 0.786 retracement. I'm suggesting to you, I'm putting out the hypothesis that where the Dow will move to is about that 15,390-ish range. And when it does that, that'll be making a 0.786 retracement from the high to the price where it's traveling to. And as it does that, it'll go ahead and it'll be making a 1.272 expansion of your B to C swing point. That would be a beautiful thing. So it looks to me like that is where the Dow wants to head to before it gives us its next sell signal in the marketplace. And yes, the New York Stock Exchange, albeit having a very nice day out here, having a nice market breadth out there, it is giving us the biggest sell signals out there, and we are in that unfavorable seasonal time cycle out here, and that's what I expect that we will see. We'll continue to see just really nothing more than the next pattern set up for a move down in the marketplace. Let's go out to Paramus, New Jersey, to Victor. Victor, thanks for calling. Thanks for holding. How are you this morning?
Good. I see Nike. Their earnings are coming out on Thursday. Is that a three gap and sell? It looks like the same setup as Metzger.
Let's take a look. Sure, let's take a look. Let's see here. I'll take a look at Nike. NKE is the ticker symbol, so we'll pull that up on my screen here. Now, for a three-gap play, wow, look at this. Is this really the chart pattern here? Give me a moment here to refresh my screen.
It has a few gaps there.
There we go. Okay. Yeah, so for a three-gap play, the answer is it was a three-gap play, but it didn't give itself up, and it really should have. And I think, Victor, you're talking – what's that?
Earnings are on Thursday, so then I expect it to blow its lows.
Yeah. If you take a look at Nike, so let's do this. Nike – well, it's not really has nothing to do with Japan. But first, to answer your question, it was a three-gap play that failed. And that was the third gap here, which was on March 22nd. And that gap up here was larger in both dollars and percentage than the first two gaps. The first two gaps, folks, were the one prior to that was on December the 21st, and the smaller one took place here on November the 19th. So if Nike does pull back, as you are suspecting it will find some pretty darn good support here on March 22nd. And the reason is 19 million shares to the upside. And so it's got a nice little hammer candle out here that basically has held. That was the downdraft of May 24th. And so you're going to want to watch here, Victor. If you're short this, you're going to want to see this thing close below 61.56, because that level here, I'll put the line across my screen, that is truly where the bulls are camped out inside of Nike, and that was that hammer candle. So pay attention to that, and that was Victor. And he was taking a look at Nike. It does have some pretty darn nice support here, volume-wise, at that March 22nd level out there. Let's go take a look. I'm going to make sure here on the indexes. I think I got, let's go back to the indexes here. It'll take a moment just to switch over. And as we take a look at it, we haven't taken a look at the socks here. Not that you want to take a look at mine. In fact, I don't really wear socks. I don't like wearing socks. That's a beauty about living here in Florida. So, but let's go take a look at the socks index, see what it, in fact, is doing out here. Philadelphia Semiconductor Index. This has had a nice move. So this is actually taking on its highs out here from June the 4th. Come on, little cursor there. Get a little engine that could here. So it is trading into the swing point. Looks like, come on. I hope that I'm giving you the right day. It looks like it is June the 4th out here. And there we go. There's my testing. So the highs out here are 477.58, and it looks like it's going to go ahead and at least test the highs there. The May 22nd area here, the May 22nd level, it's above that area. How about that? So the SOX itself ought to go ahead and move the markets into those Gartley sell patterns that we looked at just a few moments ago. 877-927-6648. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 165 right now. Let's go out to Concord, Mass, to our man, Mark. Mark, thanks for calling. Thanks for holding. How are you today? How was your weekend?
My weekend was wonderful, and went bike riding with the wife. So,
good.
Yes. Hey, nice day today, and I haven't poked my head outside yet, but it looks like it's a 10 on a scale of 0 to 10. So I have to get out there and enjoy this sunshine.
That's great. Glad to hear it. You wanted to look at the S&P 500?
I had a question on the S&P. I had a two-part question. First of all, on Tommy's show on Friday, he thought the S&P would touch 1655 and then pull back. On your earlier show this morning, you said 1643 or 1655. And what I have noticed in the first 55 minutes of trading this morning, it's gotten to 1643 point something rather. Pulled back 1 point. It's been hovering right around the 1642.5 area for the last, 15, 20 minutes. Is this a resistance point?
So great question. So first, let's do this here. Let's take a look at the S&P, and as we take a look at the S&P 500, this is a daily chart here. We'll see a couple of things. Number one, the red diagonal line on my screen is the trend line coming off of the November 16th low, and so we can see as the S&P made its first pullback, it came right into that trend line, made that nice little Gartley buy pattern. It couldn't have gotten more textbook than that. Now, when you get a Gartley buy pattern, Mark, the first area, range really, because it's really ranges that we're looking for. The normal range is a pullback to the 0.618 level, and that exact number happens to be 1653. I haven't talked to Tom if that's where he's getting up, taking a look at his number, but that range that we're looking at is somewhere between 1653 to maybe 1668. At 1660, just another 7 points up above it, is a 1.272 expansion of your B to C swing point. It's just normal areas. So what I'm saying is I would expect us to see the signal for the next pullback somewhere between 1653 and 1668. If it is 1650 or 55, it all works for me. It's really the range. And it's doing nothing more than just a math exercise here on that.
Right, I'm aware of that. But what's interesting is that it in your first show, you said 1643, then you said 1655, and what I noticed is...
I don't think I meant 1643. If I did say 1643, that was probably just me not really paying attention or my eyes.
I just thought that was interesting, that it touched the 1643, it pulled back about a point, and it's been sitting there.
Right.
Yeah, and it's 1642.57 right now, so it touched it, and now it's just sitting there. And I'm thinking to myself, well, is this resistance? It doesn't have the power to go on, or is it, I'll quote my friend Steve, is it sitting there catching his breath, waiting to make another drive forward,
Well, and so let's answer your resistance question, because we can take a look. There's a couple different resistance areas, and so what I have up on my screen now is the actual cash S&P. So it's the 30-minute chart. And the first area of resistance that it had was created right here at the open, or the downdraft from June the 10th. So there was a little bit of a downdraft out here. Let me put I'll put this as a red line across my screen out here. And what we can see is that area of resistance this morning at the open was tackled with a wide-ranging bar. So it took a lot of energy this morning to do what the markets have actually done. So just like running a bit of a marathon, that marathon really began last night, around 7 p.m. Well, for the first hour or so of trading the futures market, it was pretty quiet out here. So I can't recall the exact time, maybe 1 in the morning when it really started to take off. But you're coming into that resistance area with a wide-ranging bar. Now, the next area of resistance for the S&P 500 is right about the 1647 level. So 1643 right now. And that's where it wants to move to. Inside the cash S&P, it's not into the overbought territory, utilizing the relative strength indicator out here. So it's got more room to travel to the upside. And what I like is that when I take a look at what took place on Friday, and here's where I think the real clue may come for us, Mark, and that is that the retracement that was done on Friday in the futures marketplace. Let's take a look and see what it was done here in the cash S&P, but it's really the futures market that gives us the real clue on this. It was only a 0.382 retracement. See, on the S&P 500 itself, it shows like it was about a 50% retracement. But I'll look at the ES Mini for you in a minute. But the B to C level of that pullback on light volume on Friday was only a 0.382 retracement. And that really says to me that more likely what we're going to see is at least more than a 1 to 1A to B equals C to up. And that's what takes us into that 1665 level. But can you hold on for the break?
I can hold on, Steve.
Okay, absolutely. We'll be back with Mark in Concord. He's going to go stick his head out the window, make sure that it is beautiful weather in Massachusetts, in the Boston area. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 170 points right now. We're going back out to Concord, Mass., and we're talking to our man, Mark, author indeed, out here. And what we're taking a look at is just some different areas of resistance inside the S&P 500 in order for it to complete the pattern that I have drawn out here on my charts. It's a 30-minute chart that we're looking at. It shows a Gartley sell pattern, and it's really a sell range, an area that we have to be paying attention to. So, Mark, that wide-ranging bar to the upside was important. Closing inside the bar here from the close on June the 10th. That low was 1640.76. The high is 1644. We're not over that here just yet. That's important for it to have closed that bar. And that says that at least we should see the S&P 500 move up to its next area of resistance. And that area of resistance here basically was tested. It was tested right around the 11 o'clock session. as it happens on June the 4th, right around 1646. It was tested again here with a bearish candle. That was on about 10 o'clock in the morning on June the 10th out here. So it's a formidable area of resistance as it gets into that area. If, in fact, the S&P can close above this, doesn't have to be today, but closes above 1648, we'll call it, then that's going to set up that move to that 1650-ish area. I don't know if it's going to be 1650, 53, 56, 65. That's really the area and the range. I suspect, because all that we saw take place on Friday was and we'll really know more so today, but if the volume today to the upside is more than Friday's, then what I really think that sets up is more likely that move into that 1665-ish range. But it's just going to have to, with these markets here, they're relatively fast-moving markets. So I don't suspect that anything will really change on that. And it was really the .382 retracement that we saw inside the futures marketplace on Friday that really gave us that signal out here. Because when you only do a .382 retracement, it says you're going to typically do more than a 1-to-1 A to B equals CD. Now, you were asking about the market pulling back. And that's where I really like to look at what's really been going on inside the futures marketplace more so than any place else. And what we can see here with this price move up inside the ES-mini, this is a 30-minute chart that we're looking at, which I think gives you a really great EKG, real good heartbeat of what the market is doing and why. The market has moved up into an overbought territory, and it took a lot of energy this morning to move up, to gap up and so forth. So when you get into an overbought area, in order to work it off, much like eating too much for dinner or something like that, you got to digest. And that, in essence, is what the market ought to do. And by digesting, it can just simply move sideways, a little bit of yin and yang here. And if that's what we see it really do, is just really trade sideways to work off that oversold condition, that's actually very bullish. Another thing it can do is pull back to work that off, but then you don't know, is that pullback mean it was the extent of the move that we're going to see, or is it just simply pulling back to work off the overbought condition? So if the market does nothing more than move sideways for several hours, that's actually about as bullish as you can get.
Okay. I noticed. I noticed that the S&P is going up a point and change since we've talked.
Yeah, and with it being up 16 points, I mean, the point's not is not anything to worry about.
That's correct. That's correct. But if you're thinking, okay, well, that the market's going to turn at a given point, as we strive towards that 15, 53, or 50, whatever it is.
Yeah.
That's the time that you want to take your chips off the table and flip and go short, or maybe put your chips on the table to go short, or whatever change of strategy you want to do.
I think that what the market is doing, I'll go back to the S&P as an example here, just to give you, because maybe when you take a look at what your potential, because it's a great question. It's just really all a matter of probabilities. In this case here, what this Gartley pattern looks to be likely setting up here is really the C to D leg of the move down. So the A to B leg inside the S&P 500 went from 1687, we're going to call it, the high the high of May 22nd. So 1687, so that's your A point, all the way down to your B point, which was 1598. You're looking at about a 69-point move. That's a big move inside the S&P 500. So what my suggestion would be is wait for it to make its move up into this range. And as soon as you see a reversal signal, if you don't want to, you don't need to sell the top, especially when it's a 69-point move that we could be looking at here. So if you miss it by 5, 6, 7 points out of 69, that to me that's okay. That's really a low risk. You were waiting for a confirmation from the market, and we'll see it. We'll see some type of we'll see some type of reversal signal. It may come off of we'll see it on the 30-minute chart as much as we would on a daily chart out there. So I think that's, right now, with the information that we have in front of us, that's what the market wants to do. And for the market to move sideways, pull back a bit, do a little bit of chopping or what have you, that is just simply in order to work off the overbought condition that it traveled into already. So, what the market could easily do, work that off during the day, as long as there's no big major pullback, work off the bought condition, and then power up and close up towards its session highs here today.
All right, my friend. Well, fine. Thank you. You have a wonderful day. Hey, how's the weather down there in Florida today?
It's beautiful. You know, it's your normal summer weather. Just make sure you're wearing a T-shirt when you go outside, and then just simply make sure that you've got a T-shirt as a backup to change into.
The most important thing you guys have to put on is that sunscreen.
That's right. There you go. There you go.
You want to be sure you got that SPF 30 on you.
You got it. You got it.
Steve, my friend,
all righty, Mark. Hey, thanks so much for calling. All righty.
Bye-bye.
All right, now, folks, the Dow is up 155. S&P is up 15. If we take a look at movers and shakers in the marketplace out here, you've got Netflix up $12. Google's up 10. Let's go see what Google Priceline is up $7. Important to take a look at those equities as well. So let's go see what some of the leaders in the clubhouse here are doing. Priceline is actually, everybody talks about Apple being the stock. It was really Priceline. Somehow Priceline was able to fly, in my opinion. Priceline was able to fly underneath the radar as Apple was getting all of the darling attention, but it's really Priceline that has been the most consistent, has had the largest move out here coming off of 2009. You're talking about a low that Priceline put in at $51 or so. It's trading at $8.22 right now. Apple was trading around $75, and it failed at the $700 area. So really, the darling, although it doesn't get any Rodney Dangerfield, you would say it doesn't get any respect out here. It is Priceline. Now, with regard to respect, Priceline here did form a very bearish pattern. It was a result of the completion of an acquisition, I believe, Kayak or somebody like that, and it created that. It doesn't really matter why it was formed. It formed, and that's important. So as it made its price highs out here, made a island reversal. What's an island reversal? Well, if we take a look at the trading session of May 17th, the high out there, 814.58. Look at how it gapped up on the very next session with the low being 824.19. So you have a unfilled gap out here. And then on the next session, trade sideways, creates a little bit of a bearish engulfing type candle out here, and closes that session here at 825.06. The next session gaps down. The high of that session was only 820.72. Never touched either of these two bars out here. That's what has set up the island. Now, if we take a look at it, what is Priceline doing today? It's trying to go rescue some of those stranded passengers on the island out here. Right now, the low of that island is 824.19. It's traded 822.67 out here. It's gotten up to 824.62. So we'll see if this area here acts as resistance. And if it closes inside 825.06, well, what Priceline ought to do is go rescue those passengers, and that means sail all the way up to the high. That would be 847.33 out here. As far as any real signs of selling pressure inside this equity, not a ton. We can see some of the selling pressure that took place on the day when they announced the final of the acquisition inside Priceline, whoever it was that they bought out here. But that was net selling there was 1.8 million shares to the downside. But really, that was going into, never really got into it. It had a nice breakout session on May 10th with 2.1 million shares. So as far as institutional selling, we saw some. Not a ton. Have we seen any follow-up institutional selling? No, we actually saw more like institutional buying on May 30th out here. So Priceline as a stock still looks pretty darn good out here. And so that's Priceline. It should find good support no matter what on any kind of a pullback in the 742, 769 level. That's that last high volume bar out here, and that is in Priceline. That is what she is doing. Let's go take a look at Google. Google also a strong performer out here. So let's go take a look at Google, see what kind of candles we've got. GOOG is the ticker symbol. Let's pull this thing back here. This thing broke out nicely right after its last earnings report on April the 19th. Actually formed a how about this? Formed a little a hammer and doji candle all in one as it came back and tested the 50-day exponential moving average. Did this on this session right here, the actual June 6th out here, as it made a low of 847.22 with 2.5 million shares. That hammer candle was going against a little swing point that had 2.4 million shares from June the 3rd out here. So it found its bearings as it created that. That's actually a hammer candle out here because the wick is long enough inside this. So that is actually, yes, one would look at it and say that's a doji, and somebody might think that's a halfway move down. Can't tell you whether it is or it isn't. What I can tell you is where the bulls are hanging out, and they are protecting the price level of 847.22 because that actually qualifies as a hammer candle. Now, as we take a look at Google here today, it's up with 716,000 shares going into its most recent swing point that had 2.3 million shares. So pretty decent volume for an hour and 15 minutes of trading. This says Google easily can come back up and test the highs, this little shooting star candle that took place inside Google on the trading session of May 20th. That level right around 905 to 920.60. But no real institutional selling, no breakdown or anything like that we can see inside of Google. Let's see here. What else is moving in the marketplace? We've got to the downside. We took a look at Terex Corp. That was during the first show, so let's not go back there. Let's take a look at Novo Nordisk. That is the leader in the clubhouse to the downside. The ticker symbol on this one is NVO. We'll go take a look at Novo Nordisk, see what it is doing out here as it gaps lower, I'm sure, this morning. See what kind of volume is behind it. Give it a minute here for this stock chart here. Come on, baby. Refresh for me. Novo Nordisk is what we're looking at, and yes, it did. So this thing had some major problem. Now, this thing had some major institutional selling. This was back in February of 2013. It gapped down, big gap down, with 2.2 million shares. This morning, gapping down, and so far volume 193,000 shares. So nothing like what we saw back in February. That is going against its most recent swing point and a sign of strength here. We'll go a little bit further back on the left-hand side of the chart. So let's pull this back here. This thing had managed to get a sign of strength on November the 8th. Don't know what was behind it, but if we just simply draw a line along the top of that bar, and the top of that bar here, that had volume to the upside of 2.8 million shares. So you can see that looks like that's where Novo Nordisk is going to head to, right around the price level of 161 even Steven out here. It's at 162 right now, and pulling back on volume 193. Last time it pulled back was, well, last time it pulled back, it had 447,000 shares, so pulling back on more volume, and then 544. But looks like it should still maintain and hold the 161-ish level. That was on Novo Nordisk out here, and that is the weak link here in the marketplace. Let's see. What do we got here? Time Warner Cable. I haven't looked at that stock chart for a while. Why don't we peek in on that? The ticker symbol there is TWC, and then we'll go take a look at the we haven't looked at the ETF structures of the indexes, so we'll go do that, and then we can look in the spiders, see what's going on inside the S&P 500. But right now we got Time Warner Cable. Why is this showing as, I must have some old data here. So let me refresh my screen, because one screen shows that it's trading down $2. There we go. Wow, look at that. How about this? I did not see this. Now, all the Time Warner is doing is pulling back. I don't know what happened to Time Warner on Friday's session, but one heck of a trading candle out here. Man, they talk about a surge higher. What were they doing? Charter Communications. They must have bought Charter Communication, a merger and acquisition. That's what was going on. We'll take a look at this volume bar out here. Big volume to the upside on Friday's session. 9 million shares to the upside, pulling back this morning, giving back some of those gains, but not a big deal out here. 1.6 million shares so far. Let's pull this back here. Let's take a look at the weekly chart of Time Warner, and it's up at near its session highs. Not session, I mean all-time highs. So it did take out that on a weekly chart. That weekly chart was January 25th. The high there was 102 even. Did have some volume off of the top that next trading session, 23 million shares to the downside, but last week it moved up with 16 million shares closed over that area. So now all that it's really doing, it's really testing to see if this is going to be a real breakout here. And we'll say that breakout is going to be right above about this level, which is, we'll say it's going to be the price point. Well, the real breakout would be above 102 even, Steve, and it's trading at 101.16 right now. 877-927-6648. Dow's up 163. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's peek in on the ETF structures of the indices. Let's take a look at the Qs first right now. Qs traveling out at 73.17, but good volume in here. Now, the most recent swing point was from June the 10th as it made a high. That was coming off that hammer candle. It was 2 trading sessions later. That was as the Gartley buy pattern had actually formed inside the Qs as well. And if we take a look at that June 10th high, 25 million shares. The low of that high is 73.26. It's traded inside that. It's tagged that area. But so far this morning, 9.2 million shares. So it's coming into that swing point with good volume. Also trading into the swing point there on light volume, which is the May 22nd key reversal trading session where we saw volume off of the top. It was a high volume bar. It's being tested here. I suspect we'll see the Qs close inside there, 73.24. If that's what you see, then what that really sets up is that sets up the retracement to the 0.786 area, point about $74.21. I suspect that's where the Qs actually want to head to. So in an hour and 25 minutes of trading, it's done 9.2 million shares out there. So it's got some good volume as it takes on this swing point from June the 10th. So that's on the Qs. Let's go see what the diamonds are doing. Diamonds in the where is it? Diamonds in the Sky Forever? I don't even know if that's the name of the tune. That's Lucy in the Sky Forever, maybe. Anyways, I forget my song tuneology. Let's just take a look at my techno analysis here as we take a look at it. June 10th swing point for the Dow Diamonds. That has 4.9 million shares. We're up into that right now, and the Dow Diamonds is, and it's up there with 2 million shares with only an hour and a half in trading. So the Dow Diamonds also have the volume to take on that swing point and close higher. The bottom, which it's trading into, May 22nd right now, is 152.35. You're at 152.38 as we speak. Now the volume there, nowhere near that type of volume on that key reversal session, May 22nd. That has 13 million shares. So it's moving up, says that it wants to go ahead and complete the A to B equals CD. It wants to complete that sell pattern that we were taking a look at inside the diamonds. The A to B equals CD will get you into the 154-ish range. It's at 152.38 right now. So they got two of them, two of the ETFs that are confirming a move higher, albeit on light volume coming into the major swing point that we're taking a look at. Let's go take a look here at the SPYs, see what the SPYs are doing. The SPYs here trading out at 165.03. Same June 10th swing point. That has 102 million shares. We're into it right now with 34 million shares. So it, too, is confirming the same pattern. It's got the volume. It's going to go in and test that downdraft day with 243 million shares from May the 22nd. But that low is 165.17. You get a close inside that. That sets up that A to B equals CD pattern as well. Inside the the SPYs out here, 1-to-1 takes you to 166.46. I suspect it's somewhere in that range, 166 to 167, 168-ish or so before we see it give up the ghost. So that was on the SPYs. Let's go peek in on the IWM, the Russell 2000, see what it is doing here. The Russell 2000, for the most part, has not wanted to leave the company of May 22nd. The Russell actually has been the strongest of the ETF, strongest of the indexes, as it basically is traded with inside May 22nd for every session except for two out here. So the IWM may, in fact, go test the top. 100.38 if it can get some additional juice. 99.38, that's in the cards. It's traded at 98.61. Folks, it is Marvelous Monday, and that means that following this show is none other than our man Basil Chapman, off of a little bit of a respite, a little bit of vacation, although he did most of his shows out there. So stay tuned. Basil Chapman will be up next. Larry Pesavento follows Basil, Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Have a marvelous Monday, folks. I look forward to seeing you on Terrific Tuesday. Take care.